So, this Wall Street Journal article talks about how their desire to buy into IPOs is basically waning. Some investment banks have given up opportunities to help certain Chinese companies IPO in Hong Kong, but also it really just shows that the appetite for IPOs and Chinese equities in general is severely diminishing. Obviously, that's due to the reasons we're talking about. Um, you have right now very bad growth with respect to China. It should be like 8% or 7%. It's like 4% or something. You have millionaires fleeing. You have a lot of military tension. You have the United States and China sanctioning one another and putting restrictions on their companies right now, happening this month, last month. It's a very tense situation. It doesn't look like it's going to get any less tense. People know that, and people are responding accordingly. I mean, it doesn't make sense for someone to own stocks in China. 10 years ago, you own someone that owns stocks in China was not investing advice, so it's not investing advice. But 10 years ago, someone owned stocks in China felt like they had access to a market that would just grow like 30 or 40 or 50% a year of their company's revenue. And it was secure because there weren't any questions about whether or not the company faced regulatory risks or political risks or whatever. Now, those questions, the people are scared. So, as we can see here, combination of all those variables, people are scared because the second that Xi Jinping says he's going to be easy and open up, he seems to like turn around and then start like putting more restrictions on people. So he says one thing and he does something completely different. That's causing a lot of tension in among shareholders. I mean, that's why nobody wants Chinese stocks. I mean, you have Momo trades, I think, at 7 times earnings or something, 7 or 8 times earnings. That means right now, Momo with no growth, even though I think the revenue for this year is expected to fall a little bit or something. Momo, the company of Hello Group, is expected to sell at 8 times earnings. That's a 12.5% return if it stayed stable. That's an extreme return. Obviously, they don't have the growth prospects right now, but we'll see what happens if the Chinese economy continues to recover. Then that will be a different case. But still, in China and around Southeast Asia, it just doesn't seem like there's very much growth for obvious reasons. I mean, it's just the political tension and stuff. And Xi Jinping cracked down. It just seems like if growth was at 7 or 8%, it seems like he would start cracking down again, to be honest, from what I've seen over time. That's what it'll look like is going to happen. I think other people know that, and that's why people are starting to leave the country. People are starting to sell a lot more Chinese equities. Investors are cashing out. Investors are selling for what they can get and then moving out. And I think that people thought that this was supposed to be the opening trade, and really it's not looking very good. Or not opening trade, but that China will come back, and then China kind of hasn't come back. And there are a lot of questions, like Stanley Druckenmiller said, if China even will come back. So we'll see what happens.